Today, the crypto market is sending a very clear message, but most people aren't listening. Bitcoin is holding close to $88,000. Ethereum is fighting its way back toward the $3,000 zone. Altcoins are flashing sudden bursts of life, and on the surface it looks like confidence is slowly coming back. But underneath all of this price action, there's tension, there's hesitation, and there's a battle happening between fear and opportunity. This is not a random day in crypto. This is a moment where decisions made by traders, institutions, and long-term investors could define what the next phase of the market really looks like. Right now, Bitcoin is trading just below the psychological $90,000 level. That number matters more than people think. Every time Bitcoin approaches it, sellers step in. That tells us one thing very clearly. The market is not fully convinced yet. Buyers are strong enough to defend the downside, but not confident enough to push aggressively higher. This kind of price behavior usually shows up when the market is waiting for clarity, waiting for a catalyst. And that catalyst isn't coming from inside crypto alone. Global markets are cautious. Investors are watching macroeconomic signals, interest rate expectations, and liquidity conditions. When risk appetite is low, crypto feels it immediately. Bitcoin, despite all its progress, is still treated like a high-risk asset by large capital. When uncertainty rises, money slows down. That's why this sideways movement around $87,000 to $88,000 is so important. It's not weakness, it's compression. And compression always leads to expansion. The only question is, which direction? Ethereum is telling a slightly different story. ETH has shown a noticeable recovery, climbing back toward the $2,900 range after recent weakness. This rebound is not just speculative hype. On-chain activity, DeFi usage, and Layer 2 development are all quietly supporting Ethereum's price. While Bitcoin is acting cautious, Ethereum is acting resilient. That doesn't mean Ethereum is ready for a straight lineup. Resistance remains strong near the $3,100 level. But what it does mean is this: ETH is being accumulated during uncertainty, not abandoned. And that's an important signal. Now look beyond Bitcoin and Ethereum, and things get even more interesting. XRP has managed to break a losing streak, holding around the 190 area. Solana and BNB are seeing selective buying. But the real surprise is coming from smaller sectors, especially GameFi and DeFi tokens. Some GameFi assets have exploded with double-digit gains in a single day. This tells us something very specific about market psychology. When investors feel unsure about the big names, they often rotate into high-risk, high-reward sectors looking for faster returns. That kind of behavior doesn't happen in deep fear. It happens in cautious optimism. At the same time, DeFi and Layer 2 ecosystems are gaining traction again. Capital is flowing where innovation is visible and activity is measurable. This is not blind speculation. It's targeted risk-taking. But here's the part most people ignore. Institutional money is not behaving emotionally. It's behaving strategically. Recent data shows that while Bitcoin ETFs have seen periods of outflows, capital hasn't disappeared from crypto altogether. It's rotating. Some of it is moving toward Ethereum exposure. Some of it is exploring alternative assets with strong narratives. Institutions are no longer all in on one coin. They're hedging, reallocating, and positioning for volatility. That tells us something powerful. Big money does not believe the bull run is guaranteed, but it also does not believe the crypto story is over. And that puts the market in a very dangerous and very exciting position. Bitcoin holding above $86,000 is critical. That level is acting as a floor. As long as it holds, panic is unlikely. But until Bitcoin breaks cleanly above 90,000 with volume and conviction, the market will remain fragile. One bad macro headline could shake it. One strong catalyst could ignite it. Ethereum holding above $2,800 plays a similar role. If ETH loses that level, confidence weakens. If it holds and pushes higher, it strengthens the entire altcoin ecosystem. This is why right now is not a time for blind hype, and not a time for fear either. This is a thinking market. Short-term traders are playing the ranges. Long-term investors are watching key levels. Institutions are positioning quietly, and retail traders are split. Some expecting an immediate breakout, others expecting a crash. History shows that markets move hardest when opinions are divided. Zoom out for a moment. Crypto has survived regulatory pressure, exchange collapses, bear markets, and endless skepticism. Every cycle it gets written off, and every cycle it comes back stronger, more integrated and more mature. But maturity doesn't mean smooth price action. It means smarter capital and tougher battles. Right now, crypto is not flying freely. It's tied to global liquidity, interest rate expectations, and economic confidence. When those pressures ease, crypto will move fast. When they tighten, crypto will feel heavy. That's the reality of where we are. So what does today really tell us? It tells us the market is alive but cautious. It tells us innovation is still attracting capital. It tells us institutions haven't left. They've adapted. And it tells us that the next major move won't come from excitement alone. It will come from confirmation in price, confirmation in volume, confirmation in macro conditions. Until then, every rally should be respected, but questioned. Every dip should be watched but not feared. This is not the moment for emotional decisions. This is the moment for discipline, patience, and awareness. Because when the breakout finally comes, whether it's up or down, it won't ask for permission. It won't give warnings. It will reward those who were prepared and punish those who were guessing. Crypto doesn't move when everyone is ready. It moves when most people are confused. And right now, confusion is everywhere. Stay sharp, stay informed. And remember, in markets like this, survival comes before profit. The opportunity will come. The question is, will you be ready when it does?